All right, I believe it is day 6 now of the how to understand the markets like a pro app. Okay, so today we'll be going over one of our favorite confluences, divergences, right? Who doesn't love a good divergence? In short term, divergence is usually a pattern on the RSI, whether it's a bottom trend line or like a slanted trend lines of some sort that correlates with, price either creating equal lows or a higher low or lower low on the RSI compared to price, something of that nature. And there's both bullish and bearish divergences. Once a bullish divergence is broken, like to the downside or the opposite side, it does technically serve as a bearish confluence. And if a bearish confluence is broken to the opposite side, it does serve as a bullish confluence as well. But yeah, we'll go over some examples here of some divergences. We basically have divergences almost every day, including today during how's it called? New York session, for example. Let's take a look at our divergence here, right? If you come over to price, first of all, let's mark out our pre-market highs so we can kind of be informed here. So our pre-market high was right around this area. There was also news around 5:30. This is our wick high for news right here. And then our pre-market low was this area right here. All right, so pre-market high area. Technically, this is our pre-market high, not that. Technically, this.
Order filled.
Okay, and then we had our pre-market lows and our news high and then our news low, right? So before we explain the divergence, I'm going to explain the actual setup, because usually when there's an actual setup, there's a divergence that lines up with it. Okay, so that's why I kind of want to map these things out before I show you guys the divergence on this 5-minute. So couple things, right? We can see that, let me zoom in so you guys can see it a bit better. We failed to break these highs, right? And then we also failed to break this high, creating a lower high, and failing to break above this previous high, creating a lot of liquidity above this 961 area, right? So off rip, we know if we fail to break these highs, we could look for shorts on the break of this major low down here for a possible flip of trend, right? And what do we have down here? A bottom trend line, right? So what does that bottom trend line also line up with? 5-minute trauma and a bottom divergence down here. And there was also another divergence before this drop. So if you wanted to catch this drop to here, you were able to catch it. So we'll go over that divergence first before we go over the other one. So our major easier divergence to spot was just this major bottom divergence that we had formed down here, right? Pretty easy to spot, just this bottom trend line. You can see price bounces here, and it is higher. We hold median, we were bottomed out, and then price is trying to hold here at this bottom trend line, lining up with this divergence and median, and we failed to hold, right? Technically speaking, this was a bullish divergence, but it failed to hold, right? And then this is where you get your break of it, and then you get your opposite side move of it. So this bullish divergence fell to hold, and then we got our dump when we broke this bottom trend line, 5-minute trauma, and fell to hold this trend line here, right? Okay, so on top of that, we also had this top divergence, right? Up here, that you could have been able to catch the actual top of this short, right? You could have been able to catch these highs off this divergence up here, right? If you look up here, you can see this small divergence here forming in this 30-minute of price action right here. Okay, it's not letting me. Okay, buddy. Okay, buddy. It's not letting me fucking use the trend line. Right here. Alright. It just lets me. Yeah. Here we go. Okay. So we have this top divergence here, right? If we come over to our RSI, we can see our RSI highs. We can see our price action highs here, right? And then we had this little top divergence that we do reject. So on top of that, you know, you could have started looking for shorts here because we were topped out on the 5 minute. We had this top divergence. We failed to break, and then when you did break your median and your bottom divergence, you could have also added there or had your full entry with confirmation there, whichever one it may be, right? And this is strictly our 5 minute. Now, those are our trend line divergences, right? We also have other types of divergences like this one. Look at where price was here, right? Look at where price is here, right? Our RSI highs, we have a little divergence there on the RSI. Right.
So I have a question.
Yes, sir.
How would that be considered a divergence? Because RSI it was higher, it was also higher. So is that just not RSI making higher highs and price
Correct.
also making higher highs?
Correct. It doesn't necessarily mean you're gonna like short off rip, right? Because what could have ended up happening is we retrace to that divergence here, and now we have room from median to the top of the band. So you don't necessarily want to take a trade just based off this, but this is something to notice. Because sometimes, say the price was like lower, right, and the RSI was higher, then you would have a bearish divergence.
Yeah.
But in this case, this isn't a bearish divergence, so to speak. But it's just a divergence to you want to notice these things as they're happening. For example, over here, right? Look at our RSI high. This is a bearish divergence, right? Price is around the same area. We failed to break the RSI high. We did double top on the RSI, had this bearish divergence here, right?
Okay, because it made a lower high.
Yeah, and then we did reject that RSI level at first on this 5. Oh, this is a 15-minute RSI level. Let me make sure. Did reject that. Ooh. It was, where was that? Around this area. Yeah, so we also did reject that RSI level. Top out. And then we have other types of divergences, right? Our bottom divergences. And these are kind of cheeky because these happen a lot in consolidation areas, and then a lot of people get caught in these, right? So if we come over to this area, there's a big divergence. Before I map it out, I want you guys to think where the divergence is. There's bottom and top divergence on the bigger picture here, right? Pretty sure it's pretty easy to spot. But our bottom divergence was right about here, right? If you look at price, when did we finally get our drop, right? When we broke under that divergence, we got our small drop. It wasn't a major drop, but we got our small drop, and then it played out, and then we did end up reversing because the band flattened out our RSI level, and then we ended up topping out. Then what did we do here, right? RSI highs, lower in price we previously were, right? Boom, we double top on the RSI, failed to break over that RSI level, bands are topped out, we're at 5 minute trauma, failed to break above these highs, so now you have a bit of a bearish divergence there, right? You're going to be looking for some shorts at the top of the band on the 5 minutes. And then we do come back down and then chop a bit here. And then we approach this little area. Right? It was like this divergence right here is one of those reversal divergences. These are divergences that usually catch reversal when it looks like this. Something of this sort. Right? So we have this little bottom divergence here on top of this like bottom trend line that's kind of forming there, and we end up holding this RSI level, holding that bottom divergence, holding that 812 level, and then we actually end up bottoming out off that, and then we fully reverse until we again top out over here.
Yeah, Chris.
So
This might be a silly question, but can you just give like the definition of a divergence?
So the pinpoint divergence is technically price diverging from like, you know, the previous area. I don't know if that makes sense. Like for example, like there's many kinds of divergences because some people will say like, oh, ES and NASDAQ are at different prices, right? There's divergence there.
But from here, you're comparing the RSI to actual price action.
Yes, that's what we are comparing to see if price is diverging from each other. And then we're
How's
also
it
looking
diverging right there?
in this area?
It's still with
Down
we made
here?
a higher low or lower high. No, we circled right
Here?
on
Or
price
here?
action. We made a lower high. Yeah, right there.
Mm-hmm.
We made a lower high on price action and
Yes.
also on RSI. So how's that diverging if it's moving the same?
This is just like a bearish divergence because like if this was a bullish break, right?
Mm-hmm.
The RSI would either be higher than it previously was, or the bands would have opened up and we would have broke this RSI high and then we would be higher in price.
So because price and RSI are following the same thing, that's a bearish confluence?
Yes, it's basically like a double top on the RSI.
Okay.
All right, that
Okay,
makes a little bit more sense.
Because that's why you got to use everything together. Because look at our RSI level, right? RSI is around the same area, right? It's right around this 62 and the 59 area, right? In real time, it probably hit the RSI level. If we were going to break this, right? The band should have opened up. We should have broke this RSI level and we should have got our full breakout here. And then we would have more than likely broke this 961 area and then say the RSI would have topped out here. Right?
Looks like it tried to open up.
Yeah, but it failed. And that's why we get that wick above 5-minute trauma right here.
Yes.
So in real time, it was probably trying to break out, right? But that's where our RSI levels come in handy. This is where you get prevented from fake outs. Because we more than likely would have been approaching this RSI level. Because you can see now that the candle's closed, right? Because the RSI is delayed. Right? The RSI is delayed here. So once the candle closed, it doesn't look like it touched this RSI level, but in real time it did. And then we basically just double top off this RSI.
Okay.
And then let me find another example of those bottom divergences that end up. Yes, sir.
What's it called? It might sound like kind of dumb, but it's like vice versa, right? Like, so if it double bottoms, it's like the same thing.
Yeah.
A bullish divergence.
Yeah, and how's it called? Like the trend lines are technically divergences as well. I guess it's just it depends. Like, because there's many types of divergences we look for on the RSI. Like for example, let me find one. Right here, right? Look at this top divergence, right?
Yep.
I was able to catch a short this day. This was when we had our pop and then ended up dumping 1,000 points. And you remember, Galaxy, when I had that 293 fill?
Mm-hmm.
And this was exactly why, right? Look, we broke median, but I was looking for shorts at the highs instead of playing the breakout. Reason being is, even though we're trying to break median, we haven't broke this top divergence yet, right? If you come over to price, what is this, right? It's our, it's our top trend line, right? We failed to break above this high, creating liquidity. And then we started breaking back down on the 1 minute, and I took my entry off the 1 minute. And the main reason I took this trade was based off this top divergence. If we would have broken close above this trend line, right? And broken close above this divergence, we more than likely would have ripped. But that's why I was looking for shorts at these highs instead of a breakout of these highs. You can see this?
So how would you know when to play the bounce of a divergence and a breakout? Is that just like price action?
Price action and I guess you can say context clues of all your other confluences, right? Your levels. For example, this trend line. We made a higher high here, but failed to close above. and then we started consolidating back to the downside. I took my entry off the 1 minute in this case scenario, 740. Right, so took my entry right around, like it was here when we got this candle, and I got filled on this wick, and then I was able to catch this full short. I ended up TPing really early on this short because I was just technically like playing the shorter picture. I TP'd like at this 225 area when this 1 minute was bottomed out, and we were at 1 minute trauma, and then we ended up opening up and fully dumping the full way. And say you wanted to catch this bottom dump, right? Let's come over to our 1 minute. Our 1 minute will have so many divergences, it's actually crazy. Now when you guys look at the 1 minute, you guys are going to look at it completely different. So we had this bottom trend line as well, right? We were just in a big consolidation. Remember, market's either uptrending, downtrending, or consolidating, right? We were in this big consolidation, and we finally break this consolidation to the downside. If you come over to our RSI, what do you guys notice about these RSI lows? Right? So this is our major bottom divergence on the RSI here. Do you guys see what happens when we break it? With price action and our levels, and our RSI levels, and we use everything together. If you would have played this bottom divergence break on top of this bottom trend line, right? You would have been able to catch this full dump up until, depending where you put your stop loss, your TP, stayed valid legit the full time. Okay, because look at the 1 minute now. All right, what did we do on the 1 minute? We have our top divergence here. Oh. So we have our top divergence here that we're rejecting every time, right? Every time we get a pop on the RSI, or I mean on price action, what happens, right? We're at the top of the band. We're at the top of the band. We reject that divergence. And then if you look at where we start consolidating every single time, it's the bottom divergence. Right? So we were just technically in the range on the RSI here. But if you notice something, what did these points do? We went over this like I think a week ago in one of the classes. What did we keep doing here, right? Boom, we bottom out.
Just kept resetting.
We top out. We bottom out. We top out. Yep. We keep resetting. But what kind of reset is this? We bottom out. We top out.
It's a bearish reset because
Mm-hmm.
price is still moving lower while RSI is giving itself more room down after resetting.
Correct. So every single time we make our way down, when we push back up and buy or step in, every single time our RSI is now topped out and we have more room to the downside every single time. And that's why this whole time on this dump, a lot of people that try to play longs, they get cooked because they don't pay attention to this stuff, right? If you notice something on our RSI off the 1 minute, just looking at, don't even look at price yet. If you notice something on the RSI, when we finally decide to get a break on this 1 minute RSI to the upside, look what happens. It's our major pop of the day, right? When our 1 minute finally decides to break out. You can see our RSI finally overextends, and that's when we get our major pop of the day. But we basically were just holding these bottom divergences, these top divergences. And yeah, I mean, they're all over the place on the 1 minute. I would say the 1 minute is the best area to practice divergences. Technically speaking, it'll give you your shorter term plays because it's the 1 minute. But it is the best place to catch some good practice on playing divergences because they present themselves a lot.
You see the Bollinger Bands? They're like in a like bear channel, like if that makes sense. Like
Right
it's
here?
like going up slowly. No, a little more back. Yeah, look. You see
Here?
how it like slowly grinds up?
Yeah.
No, the whole like body from that point to the
Oh,
like yeah.
like you're talking about
all
like this
that.
whole area, yes.
Yeah, like is that like an indicator that we're gonna have like a bigger pullback soon or even a reversal? Because price is moving down while the
So-
Bollinger Bands are moving up.
Not necessarily, because now it's just your RSI like because the bands just indicate the like volatility, right? And like how much you can see when the bands open up to the downside, that means there's heavy sell pressure, right?
Mhm.
When they start it's just lower selling
Sellers are
pressure.
selling- Yes. Okay.
But that doesn't necessarily mean that it's flipping trend, because it could still go down. And as you can see, when we did get our big pop, we started heading back down, and then we did go lower.
Okay.
But so this major pop that did happen was also on the 5-minute and 15-minute, right? We come over to our 5-minute. Dump of doom and despair.
Well, that does say like sellers are slowing down because it's a measure of all velocity.
No, it just means like
Volatility.
volume is slow. The volatility
Okay.
in volume is slowing down. So if we come over to our
so
5-minute here, right? This is usually what you'll see on a day of reversal. So a lot of people see this and they don't really know what this means, right? But this was actually a bullish divergence. And this is when you actually want to start looking for reversal of the day. Because now, yeah, your bottom divergence, right? Let me erase this so it's not in the way. So you have your bottom divergence, you have your key level, you have your band trying to flatten back out, right? So you can try to bottom tick this down here in this area because you have some confluence. You have your RSI level, your bottom divergence, bottom of the band, a key level. Second, you can play the break, which is the break of like 5-minute trauma, break of these previous highs, break of 5-minute median, and then you catch the pop to the upside. And then you can see we end up rejecting one of our levels here at 571, whether you trimmed at 518 or aim for the 571 area. We did reject this RSI level and we were topped out on the 5-minute. So this was our major pop on the day, and the main reason you'd catch it is off this 5-minute divergence here, right? Major mistake people make when trying to catch a bottom is, you see this whole time the RSI was overextending. Not once did the bands try flattening out. A lot of people try catching a long when the long isn't there. Yes, you could scalp it on the 1-minute, but the bigger picture is you're literally supposed to be in and out of those calls. You're not at a bottom yet, right? So I always tell people, you always want to see the RSI come back inside the band before you start trying to catch a long, right? If you're trying to long when the bands are opening up, you're almost asking for failure. Like, you're bound to literally not catch a bottom. You can see you would have 100% been liquidated if you tried catching a long from the initial. So let's say you started trying to catch a long around 8:05 because you're like, oh, the RSI is overextended, there's no way we keep opening up, right? 30 minutes later, we would have still been opening up. And then around this area, you finally start to try to flatten out, right? Because the RSI is finally back inside the band. It is still technically open, right? And we are under our RSI level. You can see when we start to break above our RSI level a little bit and form this little bottom divergence is when we actually bottom out, when you have more confluence, right? Look at how flat the band is here compared to here. And then we get our actual bottoming out of the RSI. Does that make sense down here? This is very common. This is almost like seen so many times on like major sell-off days, a divergence like this, and then it ends up finally getting your actual like reversal or somewhat of a pop like that. We'll show another example of it. But does that kind of make sense here?
Yes, it is.
And look, what do we do here, Zane?
Double top.
And what else?
Made a. I just said double top.
Yeah, so you have your bearish divergence, your double top, and now you have your bearish reset. So this is a very bearish sign here. So you're 100% looking for shorts around this area.
Is because price made a lower high.
Yeah, so now you have your bearish reset here. On top of that, double top on the RSI, a rejection of that RSI level, and your little divergence forming there. And this is the same thing on gold, basically, divergences. And you know, honestly, another easy way to practice divergences is coming over to your 4-hour and hourly. Divergences on the bigger picture are very easy to spot. They will take centuries to play out, sometimes days, sometimes weeks, but they are very easy to spot on the bigger picture. For example, right here, Come over to our 4 hour. We form these like small divergences, like whether it's something like this, something like this, something like this, even something like this. All right, we have many types of divergence on this 4 hour. Remember the bottom divergence here on this 4 hour, the bottom trend line area that just ended up holding. And then we get our pop off that, but we never break median. We have this divergence, this bigger bottom trend line there. You have these divergences here, right? Yeah, so now we'll come over to our hourly. Check our hourly. Or no, we'll check the daily real quick before we go there. Same concept here. Look at our bottom divergence there. Top divergence there. Dude, I hate these levels. If I like click one, it's going to zoom into it. So look at price in a current aspect here, right? We're breaking daily trauma. First time we're breaking it, we're approaching median though. So probably have a little bit more upside going into tomorrow. Might get to these highs, right? That'll probably be daily median. Median's always your trim though, because we could fully reverse from median and come back down. So median's definitely gonna be a trim area on the bigger picture for like NASDAQ / any like swing trades you took. Okay, any divergences here on the daily that we can spot? Let's see. I don't really see anything too major here.
Would you consider a top divergence top trend line?
Which one are you talking about?
The most recent.
Oh, you're cutting out a bit, buddy.
Yeah. The place where you just like from there down, would you consider that a top divergence?
Not necessarily.
No.
It's too choppy, too sloppy. If anything, like the closest one to anything would kind of be like right here, that we just kind of rejected off this and wait to the downside. Be like right there, and rejected the downside. But not much on this daily. Right here, we had a lot of chop. So again, we'll come back to our smaller time frame pictures, 15 minutes, look for more examples of good old divergences. Okay. It's honestly a lot easier to spot them in real time. Look, right here, divergence, bearish divergence. If you notice something, all our divergences will usually come at the top of the band, bottom of the band, or the median area, right? Look at our highs here. Failing to break the RSI high right around the same high area. If this was indeed going to be a breakout, we would have seen the RSI be higher than it previously was here. And it failed to do so. So, top of the band, rejection of 15-minute trauma, rejection of this 961 area. You have your top divergence there. Right, and you would have been able to catch this Dumpski. And let's see. Another bottom divergence here. This whole move to the downside. This is why median is very important. This whole move to the downside last night during after hours. A lot of people tried playing longs, but we never once broke above 15-minute median once we broke under. So we kind of were just chopping to the downside until we finally did get our break. And I'll show when we did get our break here. So we have like this bottom divergence that we just hold all pre-market session basically, right? It was just this nasty consolidation to the downside, and then we finally hit a key level here, right? Look at our previous lows here, right? So we have some confluences here. That's why we finally get our full bottoming out. Because when we're bottomed out here, right, we don't have much confluence. Yeah, we're at this wick low. We're bottomed out over here. We're at this level. So there is small pops you can play, right? But this was our bottom divergence here. And then when we come over to our previous wick lows, and then we come over to that key A12 area, we hold that bottom divergence, start breaking out RSI level, and we do something very key for the first time. We finally start to break median here, come back down, hold this RSI level, and then break median, and get a quick pop. But then you can see that was short-term lived because we ended up topping out, rejecting the breakout here, and that's when we dumped. So on top of that 5-minute divergence that we're talking about around this area, right? We also had this 15-minute divergence. So there was a lot of bearish confluence here. You can see how every time frame goes hand in hand. So this was our 15-minute, right? You guys see the bearish divergence. Now if you came over to 5-minute, you would have seen this bearish divergence as well. So you always want to check every time frame.
So about that bearish divergence that you're pointing out right now, I actually had a question.
Yes.
So, I mean,
This
we
one,
were
right? The
rejecting
15 or
from
the
top
5?
there, but on the 5.
Okay. Yeah,
So if you extend it out, didn't we technically break that divergence up, and then we failed to?
this wick.
No, with the next one.
This wick. Or are you talking about
no,
like
look at the RSI
right here?
right there.
Yes.
Yeah, but didn't we technically break that top divergence and then on the RSI?
Correct. But not necessarily, because look, even though this divergence already played out basically. Now time has went, right? You're not at that divergence anymore, because what happened? This point to this point was about an hour 30 apart, right? So you already rejected this top divergence. This is if you wanted to play like this pop, this candle, right? You're not playing this anymore. You're playing this on the 15. This price action is on the 15. This wick high. Because here, this doesn't even involve this 5-minute divergence anymore. This wick. This more so is just a rejection of this RSI level.
Alright.
Because even if you like extend it, right? Like, it just doesn't line up with that anymore. But if you come over to our 15,
that makes sense.
to that same area, where was it? Right here. Now you have your 430 wick high, right? That wick high we were talking about. This was the 5-minute divergence, the initial one, right? You have your confluence to take your short there. You were topped out on the RSI, your RSI level, your 5-minute divergence. But guess what? You get your dump. So median, remember, median is always your trim, because that is where buyers have to step in. If you come over to our 5, that's exactly where.
Aren't you on your 5-minute chart for the RSI levels?
Yes.
So wouldn't it technically be different on the 15?
So yeah, it's right around the same area. But so look, so this was our 5-minute RSI level there, and then if we come over to the 15, I think it would be easier if I just had them open side to side. Oh, you're right. So our RSI level was there on the 15. Wait, no, this is the 5.
But it was still topped out.
Wait, no,
and
I'm geeked. 1 sec. The RSI level was there on the 15 as well. It was. I was looking at the wrong chart. So our RSI level was there on the 15 as well.
Oh, okay.
So remember, so say let's cut price action here to explain this in real time. Okay, so I've never used replay, so hopefully I'm using this the proper way. Okay, so let's say how the hell do I even start this? So boom, this candle happens, right? You top down the RSI, you're at 15-minute trauma here. Technically speaking, you probably have a little bit of room up, right? You're probably gonna get a pop on the break of 15-minute trauma, and then let's see what happens. Okay, boom. You get it's going too fast. Stop it. So
if you want to skip just the singular candles, I think you can press the button right next to the one you were using.
How do I go back?
But you have to cut it again.
Okay, so fuck ass replay, dude. Okay, so you get this big wick to the upside, right? Technically speaking, in real time, you were breaking that RSI level, right?
Yes.
So taking this short at this 961 area is trying to catch your top tick fill. Because realistically speaking, what are you also approaching?
Those previous highs.
Yes, so you would have a stop loss of those previous highs. So about a 35 point stop loss. If you break those highs, you're more likely going to see a lot of continuation to upside and overextension of the RSI and a move probably all the way to the 74.86 RSI level.
Okay.
So now you have your 15, right? You're top down on the 15. You have your level. Now you want to check your 5 as well. Because you don't ever want to take a trade just based off one time frame. So this is where that little cheeky divergence comes into play. If it lets me move this. So you had your top divergence here. And that divergence lined up with this area here. Right? And now when we came up there, and then we rejected hard and then sold off and came back down here. If you notice, that 901, what did that 901 line up with?
Median.
Exactly. So median is always going to be your trim, no matter what. I don't care what you're doing. Median is always a trim on the 515. Because this is the points where you're either literally going to fully reverse again or get your break to the downside. Median is very important. A lot of people sleep on it, especially on the bigger picture. So 5, 15, 30 hourly, 4 hour, you get a lot of impulsive moves off median. So you have your top divergence there on the 5, and then you would trim at median, and then you get your pop, and you probably would have got stopped out in the next candle. But then that bearish divergence presents itself after news comes out, right? Granted, you're probably not going to top tick this. It's almost impossible to top tick this because the only way is if you have like a limit order set at this 961. So that's fine, right? You missed that top tick, but guess what? You have your entry with confirmation down here. You could take your entry on the break of median right here, on that break of that 901. There's many other entries you could take, right? And every single entry has a confluence of its own, right? You could have took this bottom divergence break. You could have took the break of median with the RSI level. You could have took the break of this 901 area and this 15-minute trauma area. So just because the divergence forms doesn't mean you have to catch the top of the divergence, right? You're playing the continuation of the rejection of that divergence. Because say you enter here, right? Like anywhere around this area. You could just have a stop at these highs. Or if you wanted a tighter stop, you come over to your 1 minute and look at your 1 minute highs. In this case scenario, would be like right around this area, right? At like 929. And then you're risking about 30 points. And you risk your 30 points, and you're able to catch this big dump to the downside. And you can see when we start dumping, what did the RSI do?
It overextended.
And then when did we finally bottom out?
At the key level, and
RSI started curling back inside the band. We start flattening out. We're at a key level. We start breaking these 1 minute highs, right? Once you see stuff like that, you could look for a scalp on the 1 minute. And if you're scalping the 1 minute, you're definitely trimming at the 714 area or 1 minute trauma, even full TPing, right?
Yep, that's where I TP'd, actually. I did take those longs.
And then if you want to play the bigger picture here, you want to look at your 5 and your 15, maybe that the hourly, the 4 hour. So we'll come back to that same area. Come over to our 5 minute. We could see that 5 minute actually was fully overextended on this candle. Next candle came. We wick under, fell to close, and now we're back inside the band and flattened out. In this case scenario, on this 5 minute, there was no entry here, to be honest, on this 5. Yes, you could have played like the continuation here, but you wouldn't have been able to catch this bottom unless you switched over to your 1 minute. Because if you were waiting for this 5 minute to close, you would have missed almost 100 points here just because you waited for the confirmation. So that's why it's always useful to use your 1 minute on top of your 5 and 15. Granted, you could have caught this move instead, this breakout here. To the upside, you would have been able to catch that. But yeah, so you would have been able to easily catch this next setup when we broke this little top divergence with median and this little top trend line and break of these highs, and then we get our move to the upside. But on the 5, You can see that it was kind of harder to catch that. And then we'll look at our 15 in that same exact setup, which was right here. Same thing on this 15. If you notice right where we bounced, what was it? RSI level. Even though we overextended, we bounced right at RSI level here. Granted, the next candle, this candle, when we wicked, we probably were under the RSI level for a bit, but by the time the candle closed, we were back above. That's why candle closes are very important. For the time being, it probably just created liquidity, and then we get that bullish 15-minute candle close, created liquidity into the 714, 625 area, and then you could enter on this pullback, this major pullback on the 5 and the 15. You had some confluence. I probably, if I was entering on this pullback, let's see where I would have entered realistically speaking. Your realistic area for entry would be right around that 15 and 5-minute RSI level.
You know where you scribbled, like at the entrance? The dump?
Which scribble?
Go back to the. Go to the 5-minute and then go to. Yeah, like up there, kind of like yeah. So you said on the break of those lows, you'd probably enter.
Which one? So break of this trend line. There's many entries here. There's the top entry. You could have literally took this entry. You could have took this entry. You could have took this entry. Right. Which one? This one?
Personally, I think I would have took that one, right? And then I would notice we're approaching the trend line, and I would probably go break even.
And then you would have got stopped.
I would have gotten stopped out, exactly. So
okay, if that's the case, right? That's where you remember where I said I would have had my stop loss.
Yeah, I'll do at the highs.
No, the 1-minute stop loss.
Previous highs.
The previous 1-minute high, which was 9:30, right? If that was the case, right here, look, if we zoom in. Previous 1-minute high here at 9:30, right? You would have never got stopped out even if you played this entry. If you played this entry, if you played this entry, you never would have been stopped out. Granted, the only way this could have kind of went wrong is if you stop loss break even too soon.
But it's like
why would you use that 1-minute high? Really?
It's a good question, Galaxy. Because that's your full reversal of trend.
Oh, because we broke those lows and okay, I see.
And then if you look at our 5-minute, or was that same area? Look at our wick low here, right? Wick low here. Just that it's that full like
it
reverse.
Matches up.
Yeah.
Sorry Zane for cutting you off.
No, you're all good.
But that's a good question because it's very important to know where to have your stops, because sometimes like having too tight stops comes back to cook you. For example, that trade we took today together, I think both of you were here, Zane and Galaxy, when we took that long. Where was that big trend line break that we played today? Forgot. Right here. Right, so I missed the initial entry. I don't know if you guys remember. I was long at like I think it was 810 and got no. I'll check what my exact entry was. So we had this top trend line here, this gabagoo ass trend line, right? You guys remember the setup?
Yeah, you took it right at the level, a little bit above.
My initial entry was down here, and I actually ended up getting stopped out. I had a stop loss at this 960 area, like 959, right? This was technically an A+ setup. I should have gave myself a wider setup because, not a wider setup, a wider stop loss because I tried playing the bigger picture, right? Why is this A+ setup? Look at our 5-minute, right? Holding this RSI area. So diversify so you guys can see the RSI level. I hate that switching over fucking fucks all this. Okay, so 5-minute. Why is it doing that? Okay, there we go. Okay, so right here. Okay, so first things is where are we on the 15? Major confluence on the 15. What's the major confluence? Let me see if one of you guys could spot it. There's a major confluence here on the 15.
Bounce off a median.
Okay, not bounce off the median, retest the median, because it had not bounced off a median yet. We're anticipating that bounce off median. But it was retesting median for the first time. So right off rip, that was our 15-minute confluence. Now our 5-minute. Right? What did our 5-minute do here?
Held the RSI level.
But beforehand, what did it do? It overextended and then bounced at this RSI level and then started to flatten out. Right? So ideally, you want to take your entry here. Right? To catch this full possible reversal, so to speak. Because you have a lot of confluence. You have your key level, create liquidity, you have your 15-minute median, your RSI level hold, your 5 minutes bottomed out, right? And then boom, we get this big fuck you candle. And the second we got this fuck you candle right here, I was like, damn, I missed it. Because I really did. I tried filling it around this area once we started getting bought back up on the one, but it just never came back down. It literally just buyer stepped in heavy, and then we ripped right through. Then we broke 1 minute trauma again. I tried filling again. I don't know if you guys remember. I set an order at like 1 minute trauma. It was like after that wick. I tried setting an order at 1 minute trauma. Never got filled. And I was like, damn, looks like it's not coming back down to fill me. And then I actually said that I would play the full breakout because the setup is still valid, right? But instead of bottom ticking this now, we're instead going to be playing the breakout. Granted, breakout trading is a lot more, I guess, risky. Or not risky, but your risk to reward is going to be a lot less. Because imagine we take a long down here, right? Around this area. Where would we realistically have a stop loss? Right around those wick low areas, right? And say we target the same area we did on these longs, which was, I think, all the way to 110 I TP'd. So 110, right? Our risk to reward on this is a 6-1, right? But say we missed that bottom entry. Now we're dealt with something a lot worse. Our risk to reward now is, does anyone remember my exact entry? It was like legit, I think 42, right?
Yeah, it was right above that.
And then at first I actually had my stop loss here. So I had a 30, no, I lied. I had my initial stop loss here, right?
It was below those.
It was 1200. It was 1200.
low.
I remember. It was 30 points. So it's right there. Boom. So this was our initial stop loss, and then we still had around the same TP area. I did trim around these highs, but now we have a 2 to 1. You see how it goes from a 6-1 to a 2-1, just instead of playing the breakout, instead of the bottom, trying to catch the bottom. Granted, you're not always going to have setups to catch bottoms or tops, but your A+ setups will usually come at the top or bottom of the band. Because, yeah, we missed the bottom entry, but that doesn't mean, oh, we're not going to take the breakout entry. Because the trade is still valid, right? So we catch the breakout trade instead. And then when we started chopping, I did eventually end up moving my stop loss to, where was it? To 20 points instead, yeah, right around this area. And then it did turn into a like 3.5 to 1 instead, which is a bit better, but still, you know, you want to have some decent risk to reward there. So then we end up catching that move near end of day.
Crispy.
Yes, sir.
I have a question.
Yes, sir.
This is kind of like a little bit off topic, but what usually do you want your risk to ratio? What's like an ideal?
Minimum like 1-1. If you're taking anything under a 1-1, unless it's like a golden setup and, you know, like you're playing like maybe a 100-point move, a 200-point move, and you know you think it's 100%, like you're playing a really big picture or something. Usually 1-1 minimum.
Wait, wouldn't that mean
But
you
like,
need to have
let's say
100-point stop loss?
Yeah. So, but like say you're playing the bigger picture, right, Galaxy, and you're almost like you're pretty sure you have a good bottom, and you want to give yourself room to catch that bottom. So you give yourself like 120-point stop loss, but you're targeting like 110 points, 100 points, right? Granted, that's not always smart, but if you're sizing small, it's definitely doable. Say you're sizing like 3 micros, 2 micros, you wouldn't see that much drawdown. That would be like, what is that? Like $400 of drawdown to make like $300, $350. So it's not the greatest, but because some people aren't good at entries, that's a big issue. A lot of people have. They can kind of predict when the market's gonna shift, and you know, like, oh, I expect this to bounce around this area, but their entries are always dog shit. That's why entries are very important. Because if you have a good entry, you could have a good stop loss. Does that kind of make sense?
Yes.
But usually
Yeah,
one
that
to one,
makes
you know,
sense.
you risk $100 to make $100, $200
Yeah.
to make $200 minimum. Granted, I would rather risk $200
Minimum,
to make
yeah.
$400, or you know, $200 to make
Get 2 to
600.
1.
But usually, I always like if I'm doing a 1 to 1, I'll always trim and then hold some position to like the 2 to 1 area to secure your profit and then stop loss break even.
Okay. So it's like around 1.5 around there.
Yeah, so you kind of just
Average.
balance out. It's just more so managing your risk and
Yeah.
not over leveraging.
See. Okay.
Okay, so if we
Thank
come
you.
over to NASDAQ right now, right? This dump right now that happened was actually the bottom break of this bottom divergence on the one, right? Going back to our OG divergences that we're talking about here. We broke median, broke this bottom divergence, and then we got a small move to the downside. Granted, this was only like a fucking 15-point move, but it is because it's after hours, so, and it's the 1 minute on after hours, so it was a really slow move. But the 1 minute on after, like not after hours, 1 minute in general is really good for catching divergences. Look at our RSI highs here, right? Look at our price action highs here, rejection of that RSI level. So 1 minute is going to be your best friend, I'd say, when practicing divergences. They present themselves very commonly. I mean, we had this bottom divergence here. We have divergence here. Let's see what price was doing around this area. Yeah, we were just consolidating. And then we have that bottom divergence, and then we get that pop to the upside. We have this top divergence here that we rejected. Those highs.
The two examples you showed us are like pretty similar, right? But what could have happened is like a bounce off a trend line. No,
What do you mean here?
no, back, just back at the two examples you showed
Here?
us earlier.
Or which
No,
one?
just at the one that you were explaining, the one that you took in VCA.
Oh, the break of the trend line.
Yeah, that one and the previous one that we were talking about.
Uh huh.
It could have bounced off the trend line, no?
Like rejected, you mean?
Yeah, rejected.
Yes.
Yeah, sorry.
But why were we playing the break instead of rejection, Zane? That's the question for you. I want you to answer that.
We were bottomed out on the 1 and the 5 as well, probably.
No, not probably. I want a precise answer.
I can't. I mean, I can't see because you're on the 1 minute. That's
Oh,
all.
okay. So take a look. This is our 5 minute.
Yeah, we were bottomed out on 5 minutes.
Okay.
So. And then buyers
Correct.
did step in heavy. So.
But what are we doing here? What are we doing here?
We are getting a little pullback
What are we
We're
doing
taking
here
a-
on the RSI? What did we do here?
on the RSI.
Yes,
Oh, we broke. Oh, right there we broke a median.
exactly. Remember, this is where sellers have to step in. But we were already breaking median, right? Say we would have rejected before median and then, you know, rejected right before that trend line, then I would probably look for a short. But we didn't. We were breaking median. We had already broke median. Now we're just waiting for volume to pick up. You can see we start consolidating right at median, right?
Uh-huh.
And then we hold that RSI level and then boom, fucking rip of doom. Okay, now 15 minute. What does our 15 minute do here?
We reject off the median. And also a level.
So our 15 here.
Or same thing. We're bottomed out, and then we also broke.
Wait, that's the
median.
5. Oopsies.
Oh, right.
Okay, here we go.
We rejected off the median, right?
We bounced off median. Now we have room to the top of the band. And we're breaking this 15 minute RSI level. And we end up technically rejecting. Should actually have an RSI level here. This is respected pretty smoothly. Here, I'm actually going to add an RSI level here. At these highs here. Probably going to delete this RSI level. Pretty fucking useless. Wasn't really respected the last 3 days. No, wrong one. Getting me to erase that one. I want to erase the other one. Okay. So there we go. We updated our RSI levels just a bit because that one wasn't too respected the last 2 days, and This one was more respected instead.
I got a question
Yes, sir.
for the RSI, or like for the band, for the like the where it says 58.10, like stuff like that. When you say respected, it's like what? So it just kind of stayed above it. Or like it never broke
It's 58. It's so if you come over to a price, when we break this 50 or 58 or 50.
Oh, it was like 58.
Okay, so
It was
58.
58,
Yeah. So when we came here, what did we do? We rejected. This was our bearish divergence. We ended up rejecting hard. We came up here, rejection, 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 breakout. All right, rejection. It's just a bounce. It's a heavy area where buyers or sellers are indeed stepping in. Same thing for the reason why I deleted that 45 is if you come over to that 45, right? There was no major bounce or rejection off that 45 in the past 2 days. Only place that I really was kind of respected was like right here, and it's not much. This 50 area was way more respected, right? Look at our breakout, breakdown, rejection, 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 breakout, bounce, bounce. So that 50 is way more respected than that 45 area was, so that's why I erased that 45 area instead of that 50 area. Yeah, all right. Let's look at gold. Find some divergences on good old gold. Same concept as NASDAQ. So down here, we had this bottom divergence that we ended up holding. Right? You guys see this? This lined up with these equal lows here. 1 equal low, 2 equal low, 3 equal low. Failed to do so. This is one of those case scenarios where if we do break this with the break of this low, you're 100% going short. But as you can see, we failed to break that bottom divergence, hold it, and just end up double bottoming on price action and holding that 109 area. Does that make sense there?
Yep.
Okay. Another example. Didn't mean to move that level.
There's a top divergence right there,
Here to where?
I think. From, would you consider it from before as well? So, from, yeah.
Yes, mate. And why? What happened here, right? We have our highs. Price is higher, but what did the RSI do?
Made a lower high.
Okay, now you're cooking, buddy, right? I took the short, right? What did we do here? Create liquidity above this 48. I entered and we started breaking back below. And I actually TP'd, it was at, if I'm not mistaken, 38 area. Yeah, at this previous wick high here. Yeah, so I took this trade. This is actual short setup I took. It's something just simple as this, right? A lot of people would be, oh, we'll break this level, I'm going long. No, right? If you come over and look at your RSI, you would have seen that we had this, and you would more so not be looking for longs on the break of that, because we technically failed to break.
Andy took the second tap on that level.
Oh, he took that short as well?
Yeah, the second
Yeah,
time
so
that
that
we...
second tap was also a good setup, because what was that, right? Retested that bearish
I didn't
divergence.
see that last night.
Yeah.
I did not notice the divergence.
Yes, sir. Hypothetically speaking, say we break, right? You're able to have a tight stop loss on this, right? Because you could just have a stop loss above this wick high, or even at these wick highs the second you enter. Because the second you break that, what's going to happen? You're going to rip to the upside, right? That's going to be your break of median, break of your RSI level, break of that top divergence, break of that 48.5 area. So
Do we also retest our median?
Yeah. So you retest your median, your RSI divergence, your RSI level, and you have your bearish divergence.
And double top on price action.
Yeah, and you see how this
Yeah, how
divergence
it
helped you notice that, oh, I should be playing shorts here instead of, oh, I should be playing the breakout. It's small things like that that will prevent you from being on the wrong side of trades. And the thing, when I first started, actually, I would see something like this back then, right? And I would try to play the break of this. and I started to notice because Bear, you know how Bear posts his trades, right, Galaxy?
Yeah.
I would be going long in a situation like this, and Bear would be going short. And in my head, I'd be like, dude, why? Like, why is he going short when I'm going long? Like, I see this. I would think this is a bullish divergence because I'm like, oh, top trend line, we're gonna break, right? But that's not
That's
necessarily what it
also
means.
what I used to think.
Exactly. So that's where this is where you become a divergence master when you start noticing things like this, because it prevents you from being on the opposite side of the trade when in reality you should be playing the, the shorts instead of the longs. So there's your bearish divergence there. And you did have your continuation on this one when you overextended on the RSI, broke 5-minute trauma, or 15-minute trauma, I should say.
Bro, that makes a lot more sense because before I used to look at divergences as like differentiating from like actual price action, like we did right now.
Mm-hmm.
We made a lower high, but I didn't know it could go the same way as well to like it could be matching price action as the Confluence
To the
to keep
RSI
going the
instead.
same way.
Yeah.
Yeah.
So another little bottom divergence that we had on gold here is right here. If you notice something, these divergences we've been pointing out have been on the 15, right? If you notice something, all these moves have been pretty fucking major. Like, I mean, look at this dump, right, from this divergence. What was that? Almost 30 points, 35 points? If you look at this bottom divergence, this bounce was almost 25 points. This bounce was almost 30 points. This bounce was almost 40 points, right? When you're playing the bigger picture, this is what I was talking about with Russian earlier, how the bigger picture will paint you the bigger picture, right? So granted, that also means the second this is broken, you're going to get a possible rip to the other side, right? So say this divergence is broken to the downside, you're probably going to see a massive sell-off. If this divergence is broken to the upside, you're going to see a massive rip, right? So you want to have good stop losses when you're playing the bigger picture as well, because if not, you'll literally get liquidated. So another setup, another 15-minute divergence here, right around this area. Now we come over to price, right? What do we notice about price?
It's in an uptrend and it's holding trauma.
Yes. So basically, this was a bullish divergence. Another area where some people would try to play the break of this, but in reality, it's a bullish divergence, right? Granted, you have your top divergence as well here that you could possibly be scalping shorts off, but this kind of makes sense. You guys see this?
Yeah.
And this is the 15. It's a lot, kind of, I'd say it's a bit easier to spot it. Like, it's easier to spot once it happens. In real time, it's a bit difficult because you're almost like, dude, I'm fighting the trend. Like, you're like, oh, we just sold off. Why am I going to go long? Oh, we just sold off. Why am I going to go long? Oh, we just sold off. You get what I'm saying? It's almost like you're playing it feels like you're fighting the market because you're playing the reversal, which is true. You're playing the reversal here. If you notice, this is where price reverses. This is where price reverses. This is where price reverses. Same thing up here. Reversal. 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 Right? You even almost had a bearish divergence here where we reversed as well. I didn't even notice that until now. So you would have been able to play that short there.
Realistically, on the last divergence you just showed us, that was pumping. No, before, like down below.
Yes, sir.
Yeah, that one. You wouldn't have caught it until the third bounce, no? Because the divergence formed after the second one. And
So,
like, okay.
That divergence formed after that, but there's confluences to catch that setup still. Because look, RSI level, median, trauma, level, right?
Mm-hmm.
That's already 4 confluences. And I haven't even looked at the 5 or the 1 minute. So off rip on the 15, you have 1, 2, 3, 4, 5 confluences just on this 15 alone. That's a lot of confluences, right? You have median, 1 confluence, RSI level, 2 confluence, trauma, 3 confluence, key level, 4 confluence, and what was the 5th one? 1, 2, 3, 4. Okay, 4 technically. I lied. 4 confluences on the 15.
Okay. So like if you took a trade off like a bounce up the level, you just have
Me personally,
see that divergence.
if I took a long here, right? If I'm being honest with you, if I take a long here, my stop loss is gonna be at 54.5 like area minimum.
All right, guys.
So what is that? You're risking like 5 points. If you would have risked 5 points, right, you would have been able to catch almost 25 points. That's 5 to 1 right there. Granted, you probably won't catch that full rip. It'll probably trim at this previous highs because that's what you're supposed to do. So you'd be trimming here at like 15 points.
Alrighty.
But if you notice something, you remember how we were talking about trauma earlier as well? You notice how big the bounces and rejections are off 15-minute trauma? Like,
Yeah, and we didn't break below it.
yeah, so trauma is very, very beneficial. What Russian was saying earlier is very true, where like, you know, key entries will come off trauma, but the bigger the time frame trauma is, the bigger the confluence will be. So 15-minute trauma is way more important than 5-minute trauma. You know what I'm saying? 5-minute trauma is more important than 1-minute trauma. In this case scenario on gold, we haven't even touched 15-minute trauma all session yet. So in that case, we'll come over to our 5, see what our 5 is doing. We haven't even touched 5-minute trauma, but that's because the contracts flipped, like you said, at Galaxy. No, I'll come over to NASDAQ, see what NASDAQ's up to. Oh, I think we're approaching that big top trend line you were talking about earlier, Zane. The 4 hour. Yeah, we're kind of approaching it. Again, this doesn't mean instantly go long. It's just something to kind of note, right? What we can note here is we did break and close above 4 hour trauma for the first time in a while. We did break and close above daily trauma for the first time in a while. Our 4 hour bands are opening up. We broke this 4 hour RSI level on previous RSI highs. Technically speaking, we should have room up, right? We are approaching a key level here, so if we do break and close, we'll probably see a continuation to 271. It is after hours though, so I don't think we'll see that much continuation just because volume is slow. But if anything, we might be able to catch a top here. Reason I say that is look at this 15, right? Topped out. 5-minute technically did top out already. Not looking too good. We're already at median, and I mean price only dropped like 10 points.
So I was actually looking
sign.
for a short there, but I didn't take it because I wouldn't know where to place a stop loss in that case.
Yeah, in this case it would be really tricky because you don't have a real area to place a stop. In this case scenario, because this is your first time touching this price since like Thursday. First of all, you could come over to Thursday and look at where a realistic stop loss would be. In this case scenario, your realistic stop loss would probably be like 185. So granted, that would be about 15 points from that high. And the second thing I was going to say is if you're ever not confident in where to put a stop loss, but you really see a setup that you think, oh, this could be top or bottom, just put a 15-point stop loss on NASDAQ at least.
Okay.
But in this case scenario, if you would have like just checked your But yeah, okay. I think that's it for Divergence class today. How long was that? Was that an hour? About an hour, yeah. Again, now you guys know what a divergence is, right? So now, tomorrow, every single one of you. Are you guys all still here? Yes.
Yep.
Wait, is everyone here? Someone leave or am I tripping?
Yes.
I think someone else is missing, no? Am I geeking?
And Andy was in here.
So we have, oh, Raul's not here. Fucking Raul. Okay. So tomorrow, Sean, Zane, Santa Cruz, Sean and Galaxy as well. Other Sean. I want you guys all to find me 3 different divergences. From now to tomorrow, till we have our call tomorrow, right? I want a 1 minute divergence, I want a 5 minute divergence, and I want a 15 minute divergence.
You got it, Unc.
All right.
Sounds good.
So tomorrow when I'm trading, see, that's gonna be tricky because if I mention one in real time, you know, you guys are just gonna be cheeky, and you guys can just mention it. So I'll try not to talk about it tomorrow. I'll probably forget, but so I want, yeah, I want you guys to like screenshot it when you guys see it, and then go on your notes and write what you kind of see, your thought process, like, oh, what do you think was gonna happen, or you know, confluences for that potential bearish / bullish divergence, whichever one it may be.
Are you gonna post this video today?
Yes, or today.
Like tomorrow?
Soon. Soon.
Okay.
Okay, and if you guys
what about
don't,
the other video?
yeah, I'm gonna be posting all the videos. If you guys don't find a divergence, you guys are gonna be banned from the server. So you guys have no choice but to find one.
What you would ban me, bro?
All right.
Hey, Crispy.
Consequences.
And then I'm gonna send Galaxy to your guys' house.
Oh, nah, twin.
Okay.
Could it be today? Today's too, or just
Yeah,
tomorrow's?
from right now, like after hours to New York, all New York session.
Okay.
All right, and no help from Andy. You
You
guys
said on
can
the 1 minute, right?
one on the 1 minute, one on the 5 minute, and one on the 15. So 3 different
Okay.
divergences. And you guys can't ask Andy for help.
Are you gonna go on a chart and like we just have to like spot it, or we have to,
No, like in
show
real
you?
time. You guys have to find it on your own.
So like, we're sending you a screenshot.
Yeah, just send a screenshot, draw it out, and then kind of, you know, type a little paragraph about what you see. Like, oh, I saw, you know, rejection of these highs with this divergence, and then I was rejecting a key level, 15-minute trauma, RSI level, whatever it may be.
It's good.
All right, so I want one on the 1 minute, the 5 minute, and the 15 minute. But yeah, I think does that make sense? Everything we kind of went over today for everybody. We kind of look for on those divergences.
Yep,
Oh,
dude.
okay.
Last night, me and Zane were pressing Andy about that gold short, and I
Oh,
was
bro.
thinking, bro, there's like some secret sauce that Chris is not telling us.
Why?
And now
'Cause
that you pointed it out, I was like, okay, that actually makes sense.
why he
I
was
don't know how
shorting
I
gold
didn't
at
see
that same
earlier.
exact spot.
Yeah, he tried it like twice, I think, and then he got out of his original entry, and then he got a better entry, and he got the top entry too on that.
Yeah, well, as Bearman would say, you know what Bearish's favorite confluence is? It's good old divergence. They're
Yeah.
very helpful.
He should come teach a class one day.
He showed up to Discord. I mean, if I tell him to, he'll start popping up a bit more. But I just don't really like taking his time out of his day. But I'll ask him if he ever has free time to stop by.
Man, he just be playing Rust all day, bro. Come on.
I bet you he's playing Rust right now. Let's see.
Dude, Bishop
he's
was
not
on.
playing. Oh wait, I think they are playing.
games.
Yeah.
Yeah.
Let's see. Oh yeah, Bishop's playing right now with them. They're fucking shopping for monitors here, right?
I want to see his inventory on Rust, bro. It's probably worth like fucking 50 bands or some shit.
Dude, he spends a lot of money on games. But yeah. Alright. Any questions though on anything we went over today?